Hey everybody, welcome to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com. And if you go over to our website, we've been in business every market day since October of 2002. If you can believe it, coming up on our 23rd year. Wow. And we're still having fun and we're still making money and we're still hosting a couple of amazing rooms. This is coming to you from the live options room, fairly new launch of mine back in January of 2025. So it's been in business for about 7 months. We are up at all-time highs because we've been enjoying this nice bull market that we've had since the April lows. And I'll show you a few charts that are setting up quite nicely today. And the other thing I want to share with you is how to use the Fibonacci tool for pinpointing entries and exits on your trades. Okay, let's get over to some charts. We'll do a little bit of work first with the indexes. And here's the April low down here. Let me get a drawing tool on here. The April panic lows, right? All about Liberation Day, Trump adding more tariffs on more countries at higher rates. All of that caused the market to crash pretty heavily. It was down over 20% on an intraday basis in both the S&P and the Nasdaq, and that was the bottom. It was the bear market for a day. I think it was never really officially declared a bear market, and we certainly don't have a recession or anything like that in the macro environment. In fact, the economy is still pretty good, still running. I wouldn't quite say on all 8 cylinders, but maybe 6 or 7 of them. We've got low unemployment. We've got still pretty good job creation, and some of the readings on like manufacturing and ISM and services and so on are doing pretty well, right? They're kind of hovering around. Whoa, there's some lightning. Hovering around the contraction phase, but they've been ticking up a little bit higher on a month-to-month basis. And inflation is fairly tame. It's ticked up a little bit in the last couple of months, but really not anything to worry too much about. And we still have some higher interest rates, which are causing mortgages to be a bit sluggish and car loans, things like that. But we're probably at the peak. And when you're at the peak, there's only one direction it can go in, and that's down. So probably by the end of the year, we'll be looking at much better interest rates and cheaper money. Okay, so let's look at some of the charts for the indexes, the major indexes. We are above all major moving averages. The moving averages right now for the NASDAQ are stacked in a bullish fashion. What does that mean? It means the 50, that's the black line, is above the 200. That's the thick green line. And the 21 EMA is above the 50. And they're all rising. And that's just perfect, right? That's exactly what you want to see from a moving average basis. Now, in terms of price, we got up to all-time highs a couple of weeks ago in the Dow Jones. It's been a little bit on the weaker side because it's not just tech, right? It's also healthcare, energy, commodities, and so on. And some of those spaces have been quite a bit on the weaker side, trading underneath the 200 period moving average, not above it, like the overall index is. So the Dow Jones is lagging a little bit, but here's just about as perfect a chart pattern as you can get with a little bit of a peak breakout so far today, right? This is a bull flag. Here's your flagpole. Here's the flag itself, ran into the 21 period moving average. Nice reversal bar yesterday. Follow through day to day, peaking out above the highs of that range, at least the pullback highs. And no, it just looks great. This should print another leg higher. And here's a nifty little tip. How do I know where the target is for this next move higher? Well, you get yourself an arrow, right? You go from the bottom of the flagpole to the top of the flagpole. You take that same arrow, you put that right at the breakout point, and where it's pointing, that's your target. So up above 47,500. Is it going to get up there like tomorrow? No. Is it going to get up there by the end of the year? I'm not so sure. But that is the target, and it will get there eventually, I'm quite certain. So that's the NASDAQ. Sorry, that's not the NASDAQ. That is the Dow Jones. Always a good read. It's only 30 stocks. It's the 30 largest companies on the planet. And when those 30 companies are healthy, we know we're firing on all 8 cylinders. They're not all healthy. That's why we've seen a bit more of a sluggish move in the Dow, but they're getting healthier. Let's put it that way. The S&P 500, of course, is your big granddaddy index, and it is up at all-time highs, I think today, right? Yeah, on a closing basis, we are at new all-time highs if the market were to close right here. Again, bullish patterns. Your low down here, April panic low, is way, way, way down there. And it's been, up, down, up, down, up, down, up, down, up, down, all the way. Breaking out new all-time highs about 3 weeks ago. Continued higher. Boom, 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 boom. It was what? 1, 2, 3, 4, 5, 6. Not quite there. 7, 7, 8, 8. 7 out of 8 bars were higher, which is a pretty rare price pattern. So that's good. Now, what have we seen the last week and a half? We've seen some consolidation. Is that a good thing? Yes, absolutely a good thing. And it means that the market is just kind of cooling off a little bit. It got a little too ahead of itself, right? Price got a little bit ahead of valuations. The S&P PE ratios, right? A little bit on the higher side right now. More, if we look at historically, where have those PE ratios been over the past history? It's a little bit on the higher than average side right now. So no worries at all. The market is just kind of going to cool off for a little bit, but it's breaking out today. So hey, if it's happy today, we're long a whole bunch of stuff in both rooms and in my newsletters and in my own trading account. Just long a whole bunch of stuff of just about every sector you can imagine, and they're all doing well. We're just cranking out new high after new high. Now, here's the thing I really want to drill into everybody's head that's listening to this. And when the market gets to a new all-time high, and when your personal trading account gets to a new all-time high, and when the two rooms that I manage get to all-time highs, we're both there. They're both there. I get a little bit cautious, right? Just a little bit cautious. There's a little voice in the back of my head that says, like all market periods, it's great, it's fun, it's profitable, but it never lasts. There is always some reckoning as, the balance between the bulls and the bears, between the buyers and the sellers start to equalize. Maybe we get a little too far away from moving averages. Maybe we get too far above evaluations. Maybe some news that wasn't anticipated by the market comes out. We've been seeing some of that, right? Yes, 2 days ago on Monday, we had a big move up and a big move down, and it kind of settled somewhere in the middle because of Trump headlines. And then the same thing happened yesterday. We had a big move down on something Trump said, and then he came out a few minutes later and said, well, I didn't really mean it that way. And it rallied back up to close on the highs of the day, and we're seeing good follow through today. If we could just get guys like Trump and Musk and the Fed chair and people just to not say anything, just let the economy play itself out. Let the business leaders do what they need to do. Let traders respond to market action. Things would be a lot calmer. We wouldn't see all this intraday volatility, but that's not the reality. The reality is that we have Trump, we have headlines, we have uncertainty, and the market's going to react to that. Now, we can take some of that to our advantage because like yesterday, great opportunity to buy off some support lows that we haven't seen for about 2 weeks in a lot of good stocks. That happened yesterday morning. So you can use it to your advantage, but when it's happening, it's not always very easy to do that, right? You're kind of thinking in the back of your head, maybe this is it. Maybe this is the top. Maybe it's all downhill from here. One other thing to keep in mind, here we are in the middle of July. The second half of July and pretty much all of August tend to lean bullish. Not excessively so, but seasonally, it's usually a pretty good period of the year. Volume tends to lighten up. The big traders go off on their vacations. They go to their Hampton homes, and they don't do quite as much trading. So the volatility, the volume, and the intraday price movements of the stock market tend to get a little quieter, and that's usually good. That's bullish. But September and the first couple of weeks of October, tend to be just the opposite. It's the least bullish, it's most bearish period of the year. And if we get up to new all-time highs at the beginning of September with that seasonality going on and valuations being what they would be, then I think we're probably going to have to get a lot more cautious. But hey, we've got 6 more weeks before we get there. So let's enjoy it. All right, so that's the S&P doing great today, looking great, great, great. The NASDAQ, even stronger, right? We are it fell much further down here to the April lows, and it has risen much higher on a percentage basis than the other 2 indexes we just looked at. It is in breakout mode. We had not quite as long of a cooling off period, which is right in here, about 6-7 sessions. And it almost broke out yesterday. It tried to break out Monday, actually, when the market was pretty weak. The market gapped up and trended down all day long. The NASDAQ did not. It was buoyed up by, the big mag stocks at the top of the 100 index. And then yesterday, just the opposite, but it rallied back up and almost broke out yesterday before the close. And today is breakout day. So tomorrow we have one more day of the week. It is the 17th of July, by the way. And tomorrow, the 18th, will be an OPEX day, and we'll wind down the week. And if we get a follow-through day tomorrow, I think we're set up for a very nice run next week. Okay, that's my view of the markets. We are long. We're long the S&P 500 with some options in the options room. We are long the NASDAQ using the micro E-minis in the live trading room. And we also just bought this morning some TNA, which is the 3X bullish version of the Russell 2000 or small cap index. And this is what that looks like. So it kind of looks a little bit like the Dow Jones, right? The small cap index has been hampered. It's still well below all-time highs. In fact, it's about 2 years since it's hit all-time highs. It's really in kind of a long-term, I would say it's a bearish cycle. It's not a bear market, but it is a bearish cycle right now. And I think we're about ready to see that shift to much more of a bullish cycle. So the NASDAQ, the S&P, the Dow, they're all now, in my opinion, and I'm not alone in this, they're all now in brand new bull market cycles that triggered on that April drop, right? That reset the clock. So typically bull market cycles last 6 to 7 years. Let me say that again. Bull market cycles last 6 to 7 years, and we're at the beginning of a new one. Okay, now there's no guarantee that it's going to last that long. Of course, we could go right into a bear market starting tomorrow. You never know. But that's historical average. And that sort of sizable drop that we saw and the bounce back that we just have seen indicates to me that we had a reset of the bullish cycle. Okay, so that's all good, all very good. Small caps, however, have some work to do. Now, there are some 52-week highs up here at 2450. We're at 2262. There's a lot of upside. It's going to have some trouble probably getting through that level right there. There's a lot of volume, what we call a volume shelf or a supply shelf right there. It may take a couple of weeks, maybe longer to work through. But I'll tell you what, this is a bullish bottoming pattern right here. This is the bottom of the bear market cycle for the NASDAQ. I keep saying that, for the Russell 2000. And if you measure this, right, here's how you can measure how far this head and shoulders breakout will go. You measure the head, you put it at the breakout point, and it should get us right back up to even above 52-week highs, up close to 2,500. Again, it's not going to get there overnight. It's not going to get there at the end of the month, the next month even. But if the Fed starts cutting rates, and it's possible they'll cut rates next week at their meeting, probably not. More likely they'll start cutting in September because inflation is pretty low and the economy is still doing okay. It's not great, but it is doing okay. Then we should see the Russell start to really catch a good bid. So I think the Russell probably is going to be a little squirrely over the next few weeks, but mostly bullish. And then by the end of the year, it should have a really, really nice fourth quarter, if and only if the Fed starts cutting rates, but they should. Now, what's the pattern going on here? We've got the breakout of the inverted head and shoulders, and we have this nice little, it's not even quite a flag. It's more of a short-term falling wedge, falling wedge, flag pattern, pennant pattern, uh, high tight base. They're all very similar patterns, right? At the end of a uptrending market, you get this little sideways choppiness, up one day, down the next, and it can last for several weeks. And that's the flag or pennant or high tight base pattern. We're in that right now. We pulled back to the nicely to the 21 period moving average on Monday and Tuesday, and today, Tuesday and Wednesday. Today's Thursday, breakout day. So all good stuff. Okay, I got a little long-winded on that. Let me take a quick look at Bitcoin, which is back to green. It was in the red this morning, and it is just doing great. We've been long IBIT, IBIT, in the live trading room, and we're long Ether, right? ETHU with some calls here in the options room, and pretty much the same trade. And yeah, this whole area right in here, right? This is, if you look at just the overall price action, it is a rounded bottom, and your top. Let me use the rectangle. Your top is right in this area right here, and it took 2.5 months or a month and a half or about 2 months to work its way through that supply shelf right there. That's at all-time highs, and it finally did last week with follow through this week, and now it's doing this little consolidation pattern, which we can't quite call it a flag yet because you need 5 bars to make a flag. We only have 4 right there. Right, the one that shoots way up to almost 124,000 is the top of the flagpole. That's bar number 1, and we have 3 more bars after that, and we need 1 more maybe tomorrow. But hey, it could just break out today and continue higher. I think we'll see 150 maybe by the end of the month. That's a little optimistic. I think probably 130 by the end of the month, 150 by first quarter, and maybe 250 by the end of next year, something like that. I think you just got to get into Bitcoin. You've got to stay in Bitcoin. We've been trading it in and out, and that's not such a bad thing either. We buy the dips and sell the rips. But you need to have some long-term Bitcoin exposure in your long-term fund. Hopefully, everyone has a long-term fund. And that reminds me, let me say this about my own money management system. And I do have a whole video on this. You'll find it in the YouTube channel, the Dr. Stoxx YouTube channel on YouTube. I'm forgetting the title of it, but it goes something like this. So you build yourself a trading account with whatever money you can cobble together, right? Maybe you take on a second job or do some overtime. That's what I did. I was a professor, and I taught summer school in the summers to make extra money to put into the trading account. I had $2,000 one summer and $4,000 the next summer, and just kept adding up. And I was a professor for 17 years, so 17 summers. You can see where that would be pretty good. And I kept trading that over and over. Now, when I got up to a $200,000 account, and it did take, that didn't happen overnight, but it did happen. I decided that every time I got to 200,000, I would take 50,000 out off the top and put that into long-term positions. And I started doing this back in 2007, 2008. And I was buying Tesla, I was buying Apple, Microsoft, Google, NVIDIA. Thankfully, I got into NVIDIA, and Tesla was a great trade. I'm in at like $34 a share, and it's almost at 300 right now. So you take the money off the top. It doesn't have to be 200,000. It can be 50,000. Take 5,000 off the top, put that into long-term account, and then every time you get back up to that number, keep taking that money off the top. You know, if you really want to trade for a living, you're going to have to You're going to have to use that trading account to pay your monthly bills. I'm very fortunate because I have income from the live rooms and newsletters and some other things. I'm a partner with IBD, and I've got some consulting, and I do some client work. And so I've got a whole bunch of different income streams, and that's what pays our bills. But then when I take that, every time I get to 200, I go back down to 150 and I build it back up to 200. In an average year, I can do that twice. In a very good year, the last time I did this was 2024. In a very good year, I can do it 3 times, which is about 100% return altogether. Right? It's a 33% increase each time. And you it's that long-term fund that is going to be the wealth factor in your life, right? It's the thing that you can retire on. It's the thing that you can hand on to your kids. It's the thing you can use to buy a home, buy a car, and travel, and all of that stuff. Okay, so that's my strategy. And hopefully you'll find a way of imitating that in some way, because I guarantee if you start, especially if you're young, if you're in your 20s or 30s, you really got to start doing that now. I'm very fortunate buying those really good companies at much lower prices than they are now. Okay, back to the charts. All right, so we did indexes. Let's look at a few trading setups. My list is getting shorter and shorter here because some of the stocks that were on my buy setups are just going like crazy to the north, and then it gets to a place where it's no longer a buy. It's just there's just too much risk there. Let's sort these by worst to best. So I actually have a little bit of this one, CRWV, and this is a perfect one to demonstrate the Fibonacci tool. So here, this is an IPO, right? And it's one of the most anticipated IPOs in 2025. It came out in late March. It shot way up, and then it pulled right back down to the IPO price, and then it went on this tear. It was down at near $40 a share, and it got all the way up to 180 plus in just about 2 months. Huge run. Okay, now if you caught it along the way, congratulations, you did really well. And there were a few places that were obvious entries. The break of that pullback line, the initial IPO pullback, was one. Then the IPO day high, when it broke that to the upside, that's another one. And then there wasn't really a whole lot. You got these big green bars. You don't want to buy a big green stick. That's one of my rules. But it did kind of consolidate right here, right here. And you could have bought inside that little bracket or on a breakout on top of it, but I think inside is better. And then there was another one up here. Now this one wasn't so good because this was kind of the last time that it consolidated. Maybe if you were nimble and moved up your stops, you took a good profit, but that was it. That was the top. All right, now let's get rid of these lines. It has pulled back. When do you get in? When do you get back in, right? Well, for that, you can use the Fibonacci tool. The Fibonacci tool is a retracement tool. It is a pullback tool, and it measures the distance of the pullback relative to the uptrending market. And so the only trick with this is that you kind of have to subjectively decide where the bottom of the uptrend is and where the top is. Typically, these are pretty obvious. This one is very obvious. The bottom of that original pullback is the bottom of the trend. And then that move up above 180, that's the top. And then you've got these retracement levels. These levels typically are 38, 50, that's the black line, 61.8 or 62, that's the green line. And then you've got a couple of little lines down here that I add on. Don't usually see these in a fib retrace. I just put them in there in case you get a really deep pullback. This is called not the professional zone, the smart money zone. We call this the money zone up here, this green space. So a pullback into the green space is buyable, but a pullback into the money zone is really buyable as long as you're buying a good stock that you expect to continue going up. This one did not pull back very far, but it did get underneath the 38, which is your first retracement. Bounced cleanly out of that. Now it's coming back down again. Is it going to go back into the 38? Is it going to go into the money zone? We don't know. It's not a buy today. I still have some shares of it, but those are shares that I bought a couple of days ago, right, when it was down here, right on top of that zone. And I'm just going to hang on. I've got to stop below that pivot low right there, around 124, and I'm just going to leave it there and see what happens. All right, but yeah, so the idea here is that you wait till it comes down into at least the 38, if not the 50, if not the money zone. You don't buy it on the way down. You buy it when it starts to move back up. Okay. So the fib retrace tool is a good way of pinpointing at least an area where you are likely to see a reversal pivot back to the upside. If it's a good solid stock and the market is supportive and all of that is true about this one, it should start to move back up because these dips are going to get bought sooner or later. Let's take a couple others here. Reddit is, I've got a Elliott wave thing on there, but let's remove that. All right, so here's the uptrend, right? Here's the start of this dominant uptrend that it's in right now. Here's the top. I like to go with the intraday move, the wicks on top and bottom. And if we pull up the fib retrace tool that's expanded a little bit, we can see that yesterday it topped, bottomed out right on top of the 38. And then it rallied back up with the rest of the market, got back up above the 21 period moving average, and it's pretty much holding that level today. It's not exactly a robust move. There's a lot of stocks that are looking a lot stronger today than this one. But I like the fact that it did pull back to the first level, and that's as far as it got, and it bounced very cleanly, and it's holding that bounce. You see CRWV, right? CRWV is still coming down. This one is holding. That's good. That's a bullish sign. So I think you could buy Reddit right here. Let's take a look. We are long this one. Yeah, this was a pretty good one. So we're long TEM. It is a Kathy Wood favorite. It has pulled back into near the 200 period moving average. It's not the healthiest look out there, but we bought some longer term shares on valuations and some big call flow that was going in earlier this week. Now, this has kind of an interesting dominant trend higher. So we could start way down here and pull it up to the highest high, and you would see that it tagged the 50 period moving average, or the 50 retracement level, and bounced nicely back up. So we were buying it. I think we were buying that little doji right there, if I'm not mistaken, or maybe it was a little bit, maybe it was yesterday. So many trades in both rooms, plus my newsletters that I update at night, and I don't always keep track. I keep track on the spreadsheet, but I don't keep track in my head. But I do think that it was yesterday's tag of the 50 and a bounce back up yesterday. I'm sorry, 2 days ago tag, bounce back up yesterday and a gap up today that's holding the gap is a pretty good entry price. Now, the other way you could do this is look at the short-term trend, which starts right here and goes up to the same level. And in that case, we got down into the smart money zone, right? Now, you're not going to buy it on that red stick, but you could buy it on the little doji the next day because it's starting to bounce higher. It gapped up, and then it cracked again, and it looked, oh boy, this is really bad. You probably would have gotten stopped out. But then it was back up the next day. So clearly this is a pivot, a bullish pivot. It is a buy. So whether you're looking at the short-term zone, which gives you the smart money zone, or whether you're looking at the longer-term trend, which gets down to the 50, you've got two good buy signals right there on this particular stock. Now, beyond all that, the other thing I wanted to show you is let's go back to CRWV. So let's assume we bought some the last couple of days when it was down here at 38, and we're long. Now we need to figure out where are we going to get out? What are our price targets? Well, the most obvious price target, of course, is the most recent high, which is up here around 183. So you could get out there. You could sell into some strength. You have a big green stick, sell some off the top and hang on to the rest. You can do that. 183 would be the most obvious target, but there is a mathematical way of being a little more precise than that. And that is to use not the fib retracement tool, but the fib extension tool, which is also in TradingView. You click on that, and this one requires you to click your mouse 3 times, and you'll see what happens when you do that. So you're going to go over the same territory, the bottom of the trend, the top of the trend, and then you pull it down to the place where you bought it, your entry price. Let's say I bought it on this day right here, which is kind of where I bought it myself. and your entry price, right, is around 130 something, 133, 134, pretty much back to where it was, pretty much breaking even right now. Now, what this does is it gives you, let's get rid of this one because this is the, that one is the retracement tool. This is the extension tool. What this does is it gives you Fibonacci levels to the upside based on the price movement, based on the length of the original trend and the degree of pullback, right? How much pullback, and then it calculates Fibonacci levels going up. So your first and simplest target would be actually a little higher than the all-time high, which would be around 191. So 183, 191, and then the levels get progressively higher, but also harder to attain because or taking longer time to get up there. But 209 is at the 0.5, 227 is the 618. I wouldn't go any further than those three. But it's interesting, isn't it, to see that mathematically, based on how powerful that original trend was and how shallow the pullback was, you can see now it's giving you the mathematically precise levels where to exit if it indeed gets up there. Okay, so those are some tools that you can use in your own trading. And guess what? These work on all time frames. And if you want to day trade with these, let's just see if we can do this real quick. Let's go to the S&P, and I usually day trade on the 5-minute chart. I don't do a whole lot of day trading these days because I find it really stressful. I'd much rather kind of have a leisurely trading day where I can take my time looking at charts and I don't have to worry about every little spike. And day trading is very strenuous. I've done a lot of it, but I don't do much of it these days. If you are interested in day trading, especially in day trading the micro E-minis, you go to our site, drstoxx.com, go to the Learn to Trade menu, click on the webinars, and you find a whole webinar there, how to day trade the micro E-minis. There are 4 trading systems, fully disclosed, and lots of examples of those systems. And I think you'll enjoy that if you want to day trade, but I guarantee that you'll find it on the more stressful side. All right, so let's see if we can figure out here some entry points on this 5-minute movement. Right now, this includes overnight data, early morning pre-market data. Now, it's already up at all-time highs, and we're just breaking out and not pulling back. So there's no entry on the current price. But if we drill down and expand this a little bit, so here's that first initial thrust. And this was yesterday, I think, sometime during the day. Nice trend higher. No, this is the 5-minute chart. I'm sorry, take it back. I thought I was looking at the hourly. This was probably early this morning on the data, right? We had a bunch of data dump at 8:30, and that caused the market to go up. Now, here's your first retracement off of that rally, that market rally. So if you are able to look at this chart after that first initial thrust, and let's put the beginning of our fib retrace down there at the bottom. We pull it up to the top of the trend, click. It's now firmly in place, and we've got the 38, the 50, and the 61.8. And this green zone right in here is what I call the money zone. So it comes down into the money zone, 4 big 5-minute bars. You don't buy it on the way down. Don't buy a red bar, buy a green bar. Here is your first green bar, and it closed. It actually went all the way down to almost the pro money zone, the smart money zone, rallied back up practically to the 50, and that's your entry. That's your entry right there. So you would have bought it here at 6307. Now then, you're in the trade. Let's say you're in the trade. Take off the fib retrace and put on the extension, right? You're going to do the same thing. 3 clicks this time. 1, 2, and then we got in right on the close of that bar. Okay, so now you've got price targets. You're down here at 6307. Maybe you set some exits at these different levels, right? Maybe you have 3 contracts. You get out the first one right here at the 38 level, which is 63.14. That's a 7-point move. You get out the next one at the 0.5 level. That's another 2 points, 2.5 points. And then let's say you get out at the 618. That's another 2.5 points. So you're going to get 7, 2.5, 2.5. You get 12 points altogether for that single trade. And that whole trade took about 15 minutes. And at, what is it? $5 a point? Yeah, it's $5 a point. So what did I say? How many points was it? 7 and 5, 12. 12 times 5, $60 per contract. You had 3 contracts. You made $180 in 15 minutes using the fib retrace tool and a fib extension tool. You think you can do that? I think you can do that, right? No, it's not rocket science. All right. Anyway, so let's take a look. I just want to do real quick look through on the daily chart at some of these buy setups because there are a few good ones out there. Let's see. BZ is a China play, and I do think China is going to do really, really well once a deal is inked with Trump on tariffs, and the whole Chinese economy's been on hold until that happens. But I like this setup here, and the fundamentals of this company are very good. It's the Indeed of China. It's an online recruiting service, and they're the biggest one in China. And of course, you've got a billion people who all need jobs, and so it's a never-ending supply of customers. So what do I like about this? Well, here's your high, here's your low. We could do a fib retrace. I'm not going to worry about that. Then it starts going into this sideways consolidation as the market's kind of worrying about tariffs and all of that. The lows are getting higher. There's a very clear line of resistance right up there at about 19, and it keeps banging up against that. And every time you bang up against a level of resistance like that, you take some of that supply offline, and sooner or later, it's going to break out and move quickly to test up here at 21 or so. And the fact that we're basing right up here 5 or 6 sessions right underneath that line and above the 21, the 21's above the 50, the 50's above the 200, that's a stacked MAs and they're all rising, suggests to me that this is good, almost good to go. Now this one has been a lot higher, right? So it was up here at 2250, and it was up here again at 2650, and it was up here again at 29. So this one has a lot of good upside. It's not the most exciting stock out there, but I like this setup. SMCI is one we were in with some calls in the options room. We had shares in the other room. We're flat right now. It's doing well because it has broken out of I can't really get it all the way up there, but it has broken out of this long-term downtrend, and a fresh breakout like this usually gets some good follow through for quite a while, especially in a stock like this, because it's linked to NVIDIA and some other of the semicons. So look at this. This is just perfect, right? You get the big thrust up. You hit the resistance line, coil, 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 up one day, down the next, up one day, down the next. False breakout, false pullback, and then breakout day, follow through day, and it's been all up since then. So I'm not sure it's a buy right here, but I do think that if you could put a stop like down at around 48, if you're okay with that, it's like a 10% stop. I think you'll do well, because this is not really, unless the economy cracks, this is not going down. And that's a perfect breakout move. I would rather get in right here. That's where I would want to get in, around 48. Takes a lot of the risk out. You can keep your stop a lot tighter. Pinterest, we've had some really good success with this one in the options room. It is coiling up again, and it looks like it's just about ready to break out. So I think we can probably get back into some calls soon. I'll check the option flow because that's usually a good trigger for Pinterest. When you start to see big $500,000 million trades going into Pinterest calls, it's usually ready to go. But I like the technical, right? 2 weeks of tight, up, down, up, down, up, down, rising above the 21 period moving average, stacked MAs, everything's rising, starting to break out. Looks good. Looks really good. Airbnb is one to keep an eye on, and this is, I mean, if you do this, it's in breakout mode with a retest starting to push off. But I think the better pattern is something like this: a sequence of higher lows moving up against a ceiling, and it keeps hitting that ceiling. And the more times you hit the ceiling, the more time you're going to break out to the upside. And this looks like it's ready to go. So keep an eye on Airbnb. I like ARM. It's a little bit off of the pullback here. So we had here's your rally. It was a fib retrace to about the 50, bounced up quite nicely. It's a little bit higher than where I would want to get in, and I don't have shares. But I do think that with some patience, this is going to get up here to 180, and it's only at 156. This was one I really like a lot. It's a kind of a boring play, but Kathy Wood in her ARK Invest has been buying shares, and this is exactly what you want to see. You want to see this kind of tight consolidation underneath a resistance line or a range line, and that's exactly what we've got right here. Big green stick today. Earnings are pretty close, so I'm not sure I would be holding over earnings. There it really fell. There it really went up. There it was a gap and crap. Yeah, we'll have to wait and see. But I like the setup. We're long some toast. This is a software play. We're long calls in the live options room. We got in a couple of days ago, and it got up to the resistance line yesterday, and Toast has been doing this back, forth, back, forth, back, forth. That's exactly what you want to see. But sometimes you have to sit through that for a few days, even weeks, before you get the breakout move. We didn't have to. We got in a couple of days ago, and now we're in the breakout move. So that looks great. One last one. I have shares of QUBT, and this one looks like a lot of the quantum computing names are doing really well this week. RGTI got some good news. It went way, way up. And there's several other names. ARQQ is another one that I just came across a few days ago. But I'm in this one. It's one of my favorites in that space. And so is RGT for that matter. And I like how it's coiling up. It's probably not going to do a breakout anytime real soon. I bet it gets over here to the apex, just under 20. And then it should make the move. We're long APLD in the options room. We've got calls, breakout, confirmation, follow through day, big volume coming in. This looks great. I would like to see this go up to 14.15. 14 is your fib extension, and then actually 1370 or so, and then 15 is your 50 extension. Okay, guys. All right. Well, I don't see any ticker symbols, so I'm just going to wind it up here, and we've got a little over an hour, power hour, to wind down the day together, and we'll update our opens, see what's going on. Looks like the market's up to the highs of the day. Can't ask for more than that. God bless everybody. We'll see you back in the room in just a little bit. Bye for now.